All right, perfect. So when we are backtesting, I usually start off on the monthly just to get the overall understanding of what the monthly is doing, whether the monthly is bullish or bearish. So monthly time frame wise, monthly time frame wise, we can see that obviously all this information toward the left is important, but it's too far back for us to actually use to our best of abilities. So rather, instead of looking at stuff like this, like oh macro is bearish, what we could be doing is we could be focusing on this current monthly candle specifically, because we don't have like millions of billions of dollars to trade with. Really, we don't have that time to wait for those monthly candles to close and open. So because we're trading on the 4 hour, 1 hour, this 15 minute, we have to use smaller candles or minimize the range that we're using. So for example, right here I can say that the 1, 2, 3, 4, 5, 6 monthly candles were extremely bullish, and this current month is also bullish. So this overall does tell me that the monthly candle is bullish, meaning that the overall trend is going towards the upside, right? So someone might say, okay, but what about this, right? What about all this information here? So this information is definitely important, but we can use this as like a take profit type of thing. We can use this to identify where our where the market might go in the next couple of months or years. So for example, there's like a clean institutional candle right here, followed by like a bunch of imbalance right here. So we could say that long-term euro might come into here, right? That's our goal. We're looking to target into these areas over here. So from now on, from this information alone, I can technically say that the monthly is bullish. Now from here, I'll go down to the weekly time frame. And weekly time frame wise, I'm just going to get a good understanding of what the current weekly trend is doing. So we can see that right over here, we have this little area of consolidation. And you can kind of say that there's liquidity here, I guess. Right? If you do draw like a zone from it, like this, you could definitely say that's liquidity, but we're going to stick to lines. So we know that the market's going to have to make a run above this high right here for liquidity. So we know that overall, we're looking for buys. We're not looking for sells at all, because the weekly is bullish, as we can see, right? And the monthly is also bullish. So weekly wise, we can see price came back down into this area, and then from here it pushed up. So clearly there was something interesting about this area over here, where there's probably an institutional candle, right? So let's investigate what was inside of this area here, which caused price to go back down and then continue going up. So from here, I'm gonna go down to my daily time frame. So I go to the second daily. So now we're on the daily time frame, and look at this. So from the daily time frame, we can see price pushed up. It made a deep pullback perfectly into this institutional candle. Now if we're gonna identify this by institutional ranges, or sorry, market cycle, we can say that this was the major expansion move up. This was that I guess retracement or manipulation, whatever you want to call it, and then this was that re-expansion move back up. So I hope that makes a lot more sense. So the market pushed up, manipulated or consolidated or retraced, whatever you want to call it, and then pushed back up. And like we talked about, whenever we do see this major expansion move up that broke out of that previous range, what we're looking to do is we're looking for price to pull back into the open of that major expansion. So for example, if we take our fib out and we measure it from the high, or from the low to the high of the expansion, right? So we did it from this low up to this high. We can see that we have a daily institutional candle, or an order block, whatever you want to call it, and price came back down to mitigate it. And what's interesting about this order block is that it's inside of our blue zone, right? So we have the 88 level, and we actually turn the levels back on. Boom. So we have the 88, we have the 78, and then we have the 70. So because price is inside of these percentile ranges, that increases the probability of this order block. The reason it's more stronger is because simple discounted price. So for example, if we're highlighting let me just delete this right here. If we're highlighting this move up here, right, that's our focus, and we measure this from the low to the high of the expansion, wherever the expansion finished and where it started, the 50% of it is called equilibrium. This means that buyers and sellers are equal. There's no no one's really has more power. There's buyers and sellers are both equal, and equilibrium is where we're not trying to enter. Anything below the 50% is more discounted. Discounted meaning that there's more buying pressure. There's more orders resting below over here. So for example, if you're at a mall or something, and something's not on sale, it's worth $2,000, you're not gonna buy. You're gonna wait for it to become cheaper. So anything that's below the 50% is considered as cheap. Now in our own theology and understanding of smart money trading, 70, 78, and the 88 is considered as the most discounted price you can possibly get in at, and that's why we're looking to enter at these order blocks that are inside of these levels over here. So any questions, make sure you ask me, use your mic, chat, whatever you want. But yeah, from here, price taps into this institutional candle, and then it makes its run back up. Now I'm gonna delete all this now. Let's stick to what now. Let's look for an entry. So we've seen price come into this IC candle and then it pushed up. Now obviously what we're expecting is price to break this new high over here. We want to see this high right over here get broken, because obviously we're in a higher high, higher low uptrend, right? So we're expecting the market to continue up with this bullish momentum. Now we can see that on the daily time frame we have this small little downtrend forming, right? We have this small little lower low, lower high forming. Now what we can see is after price action tapped into our daily institutional candle right over here, we perfectly broke past this little smaller time frame lower low, lower highs. So we can say that boom, we have a break of structure right over here, BOS top, right? And then we have another break of structure right over, oh actually we don't have a break of structure quite yet, but we have that break of structure. So we know that overall we're moving higher now. So from here, let's go down to the 4-hour time frame, and let's just look at what the market has been doing on the 4-hour. Now this is where things can get a little bit tricky, where it can get a little bit confusing, but I'm going to try to break this down as easy as possible. We can see that price pushed up and broke a ton of structure. Now what are the odds that Euro USD is going to make another deep pullback right after it already made this deep pullback? The odds of that happening isn't high, because the market is moving in phases. We have an impulsive move, we have that retracement, and then we have that second impulsive move. One thing that people get confused on is when they see this. So you see that deep retracement, and then you see that impulsive move starting to form. Now it hasn't fully happened yet, but it's starting to form. Now people start assuming that, okay, that means it's going to pull back down, it's going to do all this craziness. Simply just wait for this move to continue going higher. That's literally it. Over time, this move is going to continue and push up, because look at how the market is overall moving, right? We're still moving higher. That's what we're expecting, at least. So now what we can see over here is after we did get that break of structure, we do have a pretty clean institutional candle right over here. We have this last bearish candle before that major move up. Now one thing that I was noticing is that we also did create some type of liquidity over here, which this does kind of tell you that the market is overall slowly shifting its structure. It's slowly shifting its structure to move lower, to do what? Maybe to clear liquidity. And in this case we had liquidity over here, and the market ends up going down, selling off immensely to capture all that liquidity. Now because we're looking to trade with the overall trend, I'm looking to enter at this institutional candle right over here, specifically because this is that institutional candle that was responsible for that major break of structure that happened right over here. So that this institutional candle right here is responsible for that major break of structure right here. Hope that makes sense. So let me just mark this up now. Boom to the boom. And there you go. Now one more thing that we can kind of notice is below or above our institutional candle, there is a ton of liquidity forming right here. Liquidity, boom. So even though someone might say, okay, liquidity got cleared, if you draw like a zone, it's way more clear. You can see that this liquidity is still here. In order for liquidity to be grabbed, the candles itself have to close below that level, right? That's what they have to do. So in this case, it hasn't done that. And to a retail trader, this is beautiful support to buy at, right? This is a really nice support that they're looking to buy, and every time they buy, liquidity gets stacked on below. So at this point, all we're really doing is we're waiting for price to come back into this IC candle, and then from here we can look for buys. Now, this also depends on what type of trader you are. Let's see what you said. Also imbalance. Yeah, definitely. I was gonna get into that right now. But this also depends on what type of trader you are, because if you're intraday, right, you like to scalp, you don't want to wait for those major moves. What you could also do is trade like this. You can see that there's this uptrend forming right here, and then the market broke down, breaking structure right over here. Even though this is a minor break of structure, because the overall trend is still moving bullish, that doesn't, you can still catch some nice sell opportunities from that level. So this is why I say, even though you did buy my course and you're trying to learn how to trade like me, use the information you're learning from me, but implement it in your own way and style, because the way I trade doesn't necessarily have to work for you, right? And the way you trade doesn't have to work for me. So if you were looking to sell this, you can say that this is a pretty clean break of structure. Right here we have a pretty clean BOS, sorry, not COS, BOS towards the downside. And if we're looking at how we would sell this, well, let's go down to the 3-hour time frame and let's look for institutional candles that were responsible, that were at the top of this move down or this move up, and that was responsible for that break of structure. So let's go down to the 2-hour, and at this point I'm going down to every single time frame just to find a clean institutional candle. Now right here you can kind of see that right here we do have a pretty clean institutional candle right here. This one, now because this one has more wick than body, I would take the entirety from the wick to the wick. If an institutional candle has more body than wick, for example right over, let's look for an example right here, then we take the entire just body. But in this case there's more wick, so at this point we'd take the entirety of the candle. So I'd be focusing on this level right over here if I was looking to sell, right? But because I'm not, I'm looking to buy over here, and we're gonna wait for that to happen. So let's see what price is gonna end up doing now. So in this case, price completely pushed up, breaking past this level. So clearly if anyone did sell over, he would have been down -1%, but our level sadly did not get tapped into. So for now we're completely waiting. We're not chasing the trade, we're literally waiting. But look at this, once we did see this major move up, we can see that this high got broken and a new high got made. So this high got broken and a new high got made. That means that this is our new expansion move up. At this point I can go back to my 3-hour time frame and I could look for institutional candles at the open of this expansion right here. So possibly it could be this institutional candle right here. Maybe I can go down to the 2-hour to find a cleaner one. And here we can see that there's a pretty nice institutional candle right here, right? And then we can wait for price to come back down into this level. Now you can also take your fib and measure this, move from the high or from the low to the high. And we can see that it's in our 88, 76, and 70 level. Now what's also interesting is we have a lot of imbalance right over here. And by now everyone should know what imbalance is. Boom, IPA. IPA just means insufficient price action, same thing. But boom, so we have an imbalance right beside our IC candle, which increases the probability of price, reacting off of it. Now someone might say, what about this institutional candle over here, right? Is this technically considered valid? Now if you do measure the fib, you can see that it is outside of our blue zone. Now from what I've heard and from what I've back tested and seen, as long as it's below the 50%, you can still take it. But if it's below the 70, 78, or 88, it's much more higher probable. But you could still take this institutional candle, but I would wait for a lot of confirmation if I was taking this trade, if I was looking for opportunities here. So let's see what price action ends up doing. And okay, boom. So price comes into this, first area of interest, and it just consolidates like crazy. This consolidation, it tells me one of two things. Either the market is, accumulating, which is a Wyckoff distribution thing, where for a shorter time, it basically just means the market is picking up orders, consolidating before making that big move up. So what I could do is I could go down to the smaller time frames to see what price is doing. Now I don't know if it will let me go down to the 15-minute. I'm kind of scared to go down there. I'm not sure if it's gonna break past it or not, but let me see. Alright, I'm gonna go down to 15-minute. Now 15-minute wise, let's look at structure. Structure is not telling me anything. We can see that we were making lower lows, lower highs, right? And then from here we started consolidating. Basically did nothing, we started consolidating. Now if you have a good eye, you would see that this is a ton of liquidity right over here. This area was creating a ton of liquidity. The market ends up taking out that liquidity, takes out all those stop losses, but it didn't follow up with a major move. Instead, it just continued to consolidate. So this does kind of tell me that this area of interest that we're focused on might not be the best area to focus on. Now, if you did want to refine this, you could low-key refine this up to here. But we're still waiting for confirmation. We're not in anything, we're simply waiting for confirmation. So let's play this out. In order for us to be taking this trade, we would want to see this high over here get broken. And let me tell you guys why. We have a low, we have a high, we have a lower low. And this is the range. The range is from this high up to this low. In order for us to be considering to take buys, the market needs to break above this high right over here. So until it does that, we're just waiting. And there we go. We broke above it. Now at this point, this is where we can start looking for opportunities to get in for trades. So we'll go down to the 30-minute time frame. Let's go down to the 45-minute time frame, and then simply look for an institutional candle that was responsible for that, break of structure. So we can see 2 points of interest right here. One point of interest being, up to this point right here. This is that last down candle before the major move up, and potentially on the 2-hour time frame, not seeing much. 3-hour, not seeing much. You can take it up from here. And yeah, so now we have 2 points of interest. One being right over here, and you can put your stop loss at the low for about 7 pips, and then TP could be the next high, right? And what's interesting is that this TP has, some type of liquidity forming, so it is a valid level as well. Or we could simply wait for price to come back down here. Either way, even if this one does get stopped out, it's only -1% at the end of the day, and we can move on to the next one. Alright, so once again, market did not tap us in, and this is something that you're gonna have to get used to. It happens all the time, but that doesn't necessarily mean this area is not valid. The market could easily create liquidity over here, come back down, and then tap into it. So for now, we're simply just gonna wait. So in this case, once again, price action pushed up with this expansion move back up right here, breaking past this high. Now, technically speaking, with my logic, you would want to be taking that buy right over here, because the market pushed up, broke structure, and you would want to take that buy. The reason I would not take that buy right over here is specifically because there's liquidity resting right here, and liquidity is always stronger no matter what. This liquidity over here has to get grabbed. And one more thing I want to show you guys is you can notice how weak the bullish momentum is getting. You saw that major move up, and then you can kind of see that consolidation forming. So we wouldn't be taking this trade. Even if it respects it, we have to stick to our rules, because at the end of the day, when you're back testing, you want to pretend like it's a real live market. You want to pretend that you're following your rules. You want to make sure that you're following your rules, because at the end of the day, if you're not going to follow your rules, then God knows what's going to happen. And boom, as you can see, market tanks down, takes these stop losses, and now let's see what the market does. We're still waiting for price to come back down into either this area or this area. Until then, we're not doing anything. So makes a run down, does not quite tap into our area of interest, so let's simply wait. Play some more candles. Okay, so completely breaks past this level. So from here we'd be -1%. I'm gonna write this down, -1%. Market completely tanks past our first institutional candle level and completely stops us out. Now it does tap into our second point of interest. Now we didn't set a limit here, we're simply waiting for more confirmation. So from here, let's go down to the 15-minute time frame, and let's analyze structure. Let's see what the market is doing. Let's see what it's telling us. So currently speaking, it's not doing much. All it's doing is consolidating. It's not showing us any type of bullish structure. It's not showing us any momentum, so we're not taking the trade. And then as you can see, price ends up falling and breaking past our first institutional candle and goes all the way back down to our original area, which was right here. Now notice how I didn't take that trade right over here, because there wasn't confirmation. We waited for price to come into this institutional candle, and when it finally came into there, we if it showed us the confirmation, we take the trade. If it doesn't, we don't take the trade. It's that simple, right? And that's how important it is to wait for your confirmation. So we can see it pushes down pretty deep. It made a really deep pullback. At this point, we do see our daily institutional candle, or the 4-hour rather. Let's go down to the 1-hour and see if we can refine this a little bit more. Now I can refine this institutional candle up to here. I went on the 1-hour time frame. I looked for that last down candle before the move up. We can maybe go down to the 30-minute and look for even a better refinement. And boom. Now I wouldn't refine this anymore, right? This is pretty refined, about 10 pips. And let's see what the market does. So it taps into our level, that's for sure. We already seen it tapped into our level. 5-minute, we're on the 5-minute time frame now. All we're gonna do is we're gonna look for confirmation and structure to form in our way. So right now there's no structure, nothing's happening. And then once again, price ends up breaking past our level. And like I said, the importance of waiting for confirmation. If you set a limit right here, you would have been triggered in, and it could have gone your way for a bit, keeping you happy, but then look at how price completely tanks. So this is what I'm saying. Make sure you look for that confirmation before you take a trade. So let's go back to the 4-hour time frame and just look for it. Let's look for where price can potentially go down to. Now on the weekly time frame, we can see that there is another institutional candle right here. There is a weekly IC candle right here that price can potentially make a run down to. Let's go down to the daily time frame and try to refine this. refine this up to here, this last daily last down candle before the major move up, that did break structure, right? Now from here we can go down to the 4 hour as well. Look at what price does. You can refine this up to here, this last daily institutional candle, or 4 hour rather. Go to the 12-hour time frame. Remember, I'm using all the different time frames. All I'm doing is I'm looking at price action. I'm looking at what the candles are telling me. I can see that there's another institutional candle right here. If I measure it from the high to the low, you can see that it's in the 61, which is still discounted, so I could, potentially focus on this level right here. So now I have 2 points of interest I can focus on. Price is in our first point of interest. Let's go down to the 5 minute and let's see how price reacts when it comes into our level. So for now, let's just play this out, and then boom, comes into our level. And now what we're going to be looking for is a change of character. A change of character is all it is a break of structure. All we want to see is this lower low, lower high formation get broken. That's basically it. So right here we see this low, lower high, lower low. The market breaks structure. We see that the price action over here broke a ton of structure. Now what we're doing now is we're focusing on that last institutional down candle before that move that broke structure, before that major move up that broke structure. So at this point I'd be focusing at this institutional candle right here. Now I would go down to the 1 minute or the 3 minute or the 4 minute to look for more confirmation, but sadly I can't. I think price will reset because TradingView doesn't let you go down that low, sadly. But yeah, now that doesn't necessarily mean that you're entering right away right now. At this point, we have our first clue that the market is potentially going to move bullish out of our zone of interest. What we need to see is more bullish price action form. We need to see more of this happen, right, before price taps into our level. So let's see what price action does. I want to see more bullish pressure. Now we can see that there's more bullish pressure coming in, but it's still pretty sloppy. But let's see what price ends up doing. Right now it's just moving really consolidative, and this is a good sign. This is telling us that overall our zone caused this. Our point of interest caused all of this choppiness. This bearish structure that we did see forming, it's slowly getting it's dying down, and bullish pressure is coming in slowly. So at this point we found our zone of interest, which is this institutional candle. All we're doing is we're waiting for price to tap into it. Now look at this. We end up breaking more structure right over here, or rather a continuation of structure. But either way, let's just mark it up. We break more structure over here. So at this point I could focus on this institutional candle now, this last major down candle before that move up. All I'm doing is I'm focusing on those major moves up. These are my major moves up, right? And remember, you can also use the 15-minute time frame to get a better understanding, or better look at your order block. Check the 30-minute, check all the different time frames, and it's much more easier and simple that way. But for now, let's just see what price ends up doing. Okay, so once again we do get stopped out. It does tap us in, does give us a small little reaction from here. It gives us a small little reaction, and we do end up getting stopped out. So price is still in our zone of interest, so we're still waiting, right? We're still waiting. Right now we're about 2% down, negative 2%. I'm gonna write this down, negative 2%. Boom, negative 2%, because we only did take 2 trades, and both of them did end up getting stopped out. But this is the the beauty of risk management. Even though we did get stopped out both trades, price is still one trade. All we need is one trade for us to go in profit. Now right here, price goes back into our point of interest, pushes up. Now do we see that bearish structure get broken? We have a low, sorry, my bad. We have a low, lower high, lower low, higher high. So we have another break of structure. So at this point, let's go down to the 15-minute and let's look for the institutional candle that was responsible for that BOS, right? In this case, the 15-minute is showing a pretty clean institutional candle right here. This last major down candle before the move up. If price could break past this high as well, that would give us more confirmation and more confluence for our trade. Now, in this case, it did tap us in once again. I hate this right now. I don't know why. Your USD is killing me. But yeah, it taps us in once again, stops us out, negative 3%. I'm keeping this blunt as possible. I'm not here to show you guys crazy 50 to 1s. You're gonna lose a lot. That's just the truth of trading. You're definitely gonna lose a lot. So this zone of interest did not play out. Price could possibly be making a run down up to here. So let's go down to the daily time frame and let's play this out. Oh shit, I think I went too far. I think I went too far down. Um, all right, yeah, but basically, all right, yeah. Who cares? I'll just show you guys an analysis on euro now. So basically, the market did create this major move up, lower, higher low, higher high, higher low, and potential higher high. Right, but the market is retracing now after breaking structure right over here. We saw this low, lower high, lower low forming, and we can see that the market did end up indeed breaking structure. Now here you can see that the candles itself closed above. We see that price action closed above our point of interest right here, right? And this is that major impulsive move up. So right now we are still 3% down, but this is our major impulsive move up that price did create that broke structure. So because this is our major impulsive move up, we could technically be focusing on this last institutional down candle before that major move up, right? Now, what's interesting is this is once again below the 88th percentile zone, which makes it a lot more stronger. And simply price didn't respect this institutional candle. It didn't respect this institutional candle. It didn't respect any of these IC candles. Now, when price is not respecting an institutional candle, it's telling you something. It's telling you that the banks are not interested in this IC or this IC. Rather, they're focused on bringing price lower into a different institutional candle. So because this one didn't get respected, neither did this one, that means that I have to look lower. In this case, the lowest OB that I can find is this one right over here. Now maybe I can go down to the 12-hour, refine this up to here and wait for price to come down to here now, and that would be a good opportunity, right? Price comes down into here and we can look for possible viable opportunities. So sadly we are negative 3% on Euro USD because I did not I can't even continue this because we're right over here, we're at current market price, but I'll go somewhere farther back in time, somewhere like right here. Boom. Alright, boom, we're somewhere farther back in time. Let's do this. Overall, let's look at this. We had this major move down right here. We have this crazy manipulation zone forming, a bunch of liquidity of the highs, a bunch of liquidity of the lows. Market goes down right over here, goes down, and then from here we have another re-expansion back up. So boom. Now overall I can start saying that we are pretty bullish now. I can technically say that we are pretty bullish now. The market is creating higher highs, higher lows. Now how would I look for opportunities on here? Well, once again, let's go down to the weekly time frame and let's look at price action. Weekly wise, consolidating, it is pretty weak, it's really bearish, but the last 3 weekly candles have been pretty bullish. Now this is something important you should keep in mind. If the weekly candles are forming bullish, that means that the next few weeks are potentially going to be bullish and you're going to see a lot of buying pressure. Now daily time frame wise, really we're just in this weird little range. We are bearish on the daily, but macro structure wise we're still pretty bullish. We did see this break of structure forming right here, which does explain why price action is showing us this bearish structure or bearish pressure forming. But overall I can confidently say that Euro USD is still going to be moving bullish because of this major impulsive move up. Now what we could technically say is that Euro might be making a deep retracement somewhere back down to here to continue going bullish, but for now we just have to wait and see what price ends up doing. So let's look at structure. We have a low, lower high, lower low, right? Overall we're moving lower lows, lower low, lower highs. So at this point there's an institutional candle right here at the start of this major move down, and this is the start of price giving us that continuation of structure. Price broke a previous low and printed a new low. Broke this previous low, printed a new low. Now this is the first move down, this is that retracement, this is that second move down. Now I can highlight this institutional candle once again because this is on the retracement that followed by another expansion. Now this area right here has imbalance, which is really important to me. It has imbalance right here, so that means that price is going to have to make a run above over here to mitigate that imbalance and potentially tap into our IC and then go down. So from here let's just wait for see what price ends up doing. Now our first area of interest gets tapped in. Let me go back right over here. My bad. Played this out too quick. Let's go down to the that's weird. I think the broker, that's something to do with the broker, I'm not sure. I'm not even sure how to go on with this now anyways. But if we did see that, the confirmation we were looking for, if we did take this trade and we saw the confirmation we were looking for, I can't even show you guys a proper risk to reward because the broker, opened with a gap. But you can see that price overall reacted off of our point of interest, which we did mark on the daily time frame, extremely well. It tapped in perfectly to the pip right over here, and if you did want to refine this, you could have easily refined this up to here, refine the zone right up to here, and then you can see price overall, you know, came in or missed it by a pip if you did refine it, but overall it did react off of our daily institutional candle and gave us that pretty nice deep move down. And then overall, you know, if you're depending on where you're targeting, if your target was like down here, let's see if we get tapped in. So overall it did miss targets. If you were targeting over here, it did miss targets, but this would have been a pretty successful trade. The way you would manage this is once you're in the, you know, once you're in the trade, once you are in this, you know, trade, once price goes, at least breaks some type of structure. We do see right over here, price was creating this bullish structure right here. Once we do see price broke this previous higher low, that's your signal to take 50% off and move your stop loss to break even. That's my philosophy. Once we do see price break structure and we see that momentum is going down, take 50% off and you know, move your stop loss to break even. Now remember, we were negative 3%. This trade would, if you did target over here, this would have been like a, let me move my stop loss up to like, let's move it to like 25 pips, you know, something random. Let's put it at the high of this daily candle. This would have been a crazy 8-to-1. Now you just made back everything you lost plus more, right? So that's what I'm saying. Risk management is extremely important. So our daily institutional candle was correct, and overall this trade was successful. So I can say this was an 8% gain. 8%. We took one trade and we made 8% on that. -3, that's 5%. So overall that's still a pretty good trade. So this trade is, you know, successful. We're out of this. Let's see if price can tap into our next institutional candle over there. So TP would have, you know, TP would have gotten, you know, tapped. And yeah, so price reacted off for a daily candle. Let's move on to the next one. Let's delete everything. Let's move on to the next trade. If you guys have any questions, make sure you guys can ask now. You know, you guys can ask, unmute your mic, chat, whatever. Just let me know. So let's go back to the daily time frame. Oh, I hate when TradingView does this. Alright, bet. So weekly now is showing us extreme bearish power. Extreme bearish power. Now what this could mean is that the market is going back down to maybe over here to go, you know, continue that bullish structure. Who knows? So I'm gonna highlight this weekly POI right here, and I'm also gonna highlight this weekly POI right over here, because we can see that we had this major move up, and price likes to retrace when it makes these major expansion moves up. We have a 70% zone right here. We have an 88% zone right here. Now we're gonna refine this obviously because this is way too big. So let's refine this. You can refine this up to this daily institutional candle right here. And if you go down to this time frame right here, you can refine your institutional candle up to here. Right? This institutional candle right over here. This last daily candle before that major move up. So we have our 2 points of interest. All we're going to do now is wait for price to come into it. Remember, I'm a swing trader. These are the type of setups I like to wait for. I don't like to, you know, trade this little manipulation, this small retracement out. I'm waiting for price to come back into this and then catch that major move up. So let's see what price ends up doing. This is extremely laggy. But alright, we're really close to our POI, and then boom. So we tap into this first institutional candle on the weekly. Let's go down to the 1 hour and let's look at structure. Now I'm not sure if I can go down to the 15-minute time frame. I'll get into that right now, brother. Trust me, just give me a quick second. I got you. So we do see this lower low, lower high formation happening. Lower low, lower high. What we want to see is that lower low, lower high get broken. So do we have a break of structure? Well, indeed, yes, we do. We have a pretty clean break of structure right here. And if we can get an even nicer break of structure right here, that would be even better. Okay. Oh shit, I played this out way too much, my bad. Sorry about that, sorry about that, guys. Yeah, so we have that break of structure. Now, once we do get that break of structure, like I always say, focus on the last institutional down candle before that move up. In this case, we have the break of structure, check. We have the bullish structure forming after price came into our POI, check. We have the institutional candle, check. We have all these confirmations, let's check sessions. It's in London session as well, which is good, right? Euro USD is mostly active in New York, London. So now we have sessions by our side. One more thing, liquidity. This liquidity over here ended up getting grabbed. We have these equal lows. Market grabs it and then pushes up and breaks structure. So obviously at this point, we're going to be setting a limit at this institutional candle right here. Because this is our POI, this is that last down candle before the move up that broke structure. And TP could either go at the next high over here, which would be a 5-to-1, or you could go for even nicer risk to reward, which would be all the way over here. Now, you can see you do get tapped in pretty nicely. And this was a New York session. So New York taps into our, POI, and then the market ends up, let's see if it smacks our TP. Okay, so there we go. Our TP did end up taken out. That's a 5 pip stop loss for a 63 pip TP, and that's an 11-to-1 risk to reward. So that's 11% you just gained depending on your stop loss. So 11%, we also had an 8% trade, and we're also negative 3%. Because we took 3 trades, that was negative 3%. Now, 3 trades, we took negative 3%. We took 5 trades, and look how much we gained, even though we're only negative, we took 3 trades, or we took 5 trades. 3 of them, were losses. 2 of them were wins, and look at the gains. This is what I'm trying to show you. The secret isn't order blocks, it's not imbalance. There's no secret, it's just in risk management. The risk management keeps you in the game long term, and that's what I'm trying to show you guys. And yeah, so this one would be a pretty nice overall winner. Let's go to the daily time frame. Let's go to the weekly again, and let's see if price taps into our second POI. So overall, this just completely flew. Alright, so from here, okay, boom, perfect. From here, our first POI, perfect. We made 11% on this. Second POI tapped in perfectly. Taps in perfectly to our daily institutional candle. Now look at this. We have this area of manipulation. We have this major expansion move up. Price does what? We highlight the zone. It comes perfectly inside of our 88th percentile order block. Now this isn't a coincidence, this is all calculated. Price comes into our institutional candle, and then from there it has a really nice decent move up. Now let's go down to the 4 hour, and let's try to actually look for confirmation within this entry. Let's go down to the 15 if it allows me. Okay, there we go, perfect. Alright, so boom, price taps in. Now at this point, there's no confirmation. We're not buying, we're not selling, we're not doing anything. We're waiting for that bullish structure to form. Now notice this, we have liquidity forming. You have to keep an eye out for these things. We have equal lows forming right over here. Now these equal lows did end up getting grabbed, kind of, not really, but the candles itself didn't close below, so the lows didn't get grabbed yet. So we still have liquidity forming over here, so I would still wait for price to come back down to that level. And then right over here, boom, we get price comes back into our level. Now we do see the bullish structure. We do see a bunch of breaks of structure forming right here. The structure overall is moving extremely bullish. Now what you could do is you could look for that institutional candle that was responsible for that major impulsive move up, and look to enter over here, depending on if you would assume that this liquidity over here got grabbed or not. Now because the setup itself looks really good, and I did say before, if there's liquidity below, don't take the trade. But like I said, it all depends on the setup. For example, this setup, the bullish structure is there. Overall, the structure is there. The momentum is there, right? All there is liquidity here. So even if we do get stopped out over here, that's fine. We can look for re-entries. So I'd be looking to re-enter over here. Stop loss just at the low. If I get stopped out, no biggie. I'll look for more confirmation for a second trade. Now, perfect. All right, so there you go. We do get stopped out. Market does stop us out, but whatever. We move on to the next one. Liquidity gets grabbed. Now from here, we do see this lower low, lower high formation happening. Now what we want to see is this lower low, lower high formation completely get... Oh shit. I can't go down to the 5 minute. I'm so sorry about that. Hold on. We'll go back to the daily time frame. Go back to the replay mode. Boom. My bad. I can't go down to the 15-minute sadly, or the 5-minute. But yeah, so what we'd be waiting for now is price to, let's just go back to where we were. I think we were right over. You were right over here. Yeah. So we have a break of structure once again. Pretty clean break of structure. I think we were here. I'm not too sure. Yeah, I think we were here. Pretty clean break of structure, but the candles didn't really close above it. Now, actually, it did, but I would want a more deeper, candle pullback, breaking above it. And okay, so boom, price goes down and it taps into this institutional candle right over here from our daily zone. Now, if you could take this trade, I think you would have gotten stopped out if you did put your stop loss at the low. So if you guys did watch my order block video, I said two things. You can either put your stop loss at the low of the institutional candle, which is right here, or you could put it a few pips below at the next low. So for example, you could put it for about 15 pips if you wanted, right? Depending on how you trade. I would have got stopped out. I'm keeping it real with you guys. I would have got stopped out. I'm not gonna lie. I would have got stopped out. But let's see how this trade ends up playing out. And TP did get smacked. So our stop loss was a little too small, but that's how I like to trade. I like to trade with really small stops. So yeah, so this would be another negative 1%. So that's about negative 4%. But we also caught, let me actually get my calculator out. So we caught 11 plus 8%. So that's about 19% we caught. Now 19 minus 3. That's 16% we caught, and we only took about 7 trades. That's the beauty of risk management. Now, that was a pretty good backtesting session. I'm going to go over, someone said in the chat they want me to go over Euro JPY. So I'm going to quickly do that for everyone. If you guys have any questions, make sure you guys ask. I don't mind. Remember, like, any questions you guys have, let me know. Let's do this. EJ, okay. Let me actually open a new chart. So EJ, overall we're moving pretty bullish, right? We do see a pretty deep retracement. This was FOMC news, right? So the start of this, major move down that happened, it was all FOMC. Definitely, it was all FOMC. Euro was extremely bearish. US was extremely bullish. Now we can see that this is our major impulsive move up. And like you guys saw in Euro, when the market makes a really nice move up, usually the market ends up, retracing back into the 88th percentile of it. Now, if we take their, our fib measure from the low to the high, we have a bunch of POIs we can focus on. One being this institutional candle right over here, and the second one being this institutional candle right over here. Now, both of these institutional candles are inside of our major expansion move. That's number one. Two, they both created a lot of bullish momentum moves. For backtesting, how far back should I go? Where are the factors to help me decide? So, okay, so for example, if you're looking to backtest, like, just to understand your strategy, you shouldn't go too far back in time. So if I'm backtesting EJ, go a few days back. So maybe up to here, maybe just up to like here. That's it. The reason I say this is because you want to be trading with the current market, scenario. The market scenario compared to like 2017 is nothing compared to what it is today. So remember, when you are backtesting, backtest the last couple of weeks, maybe last month, but don't go past last month. I went extremely far back in time just to show you guys how I would backtest, but go back last month. And the way you can do that is go on the monthly time frame, and let's say this is current market price. Just click replay mode, and then boom, go back right over here. That's it. Just click over here and then price, and then from here you can start backtesting and doing your thing from here. And yeah, hopefully that answers your question. But yeah, let me go back to what I was saying. So we do see this major impulsive move up. Market, creates an impulse, retraces, impulse ups once again. Now we have an institutional candle right here. What's interesting about this institutional candle is that it is pretty strong. It's clean. Remember, it can look really clean, but remember, liquidity rests below that institutional candle right here. We have equal lows resting below this. That means that there's stop losses. So that doesn't mean that don't focus on this, because you can definitely get a pretty nice, decent intraday move from here. Maybe 20, 30, 40 pips, or maybe you can come back to fill some of this imbalance. But it might not give you that major move up, right? What may give you that major move up could be this lower institutional candle. Now, it's also in the 88th percentile zone, right? We have the 88. It's below the 88, but it's still valid. So we have our 2 points of interest, right? Now, price needs to go up. It just needs to continue going up. Euro is extremely bullish. There's no way Euro is going to be so weak that it's going to fall all the way down here. Makes zero sense. It's most likely going to come down to take out this liquidity here, tap into this IC, and then we can make a run towards the next highs. Now, let me show you guys something. If we were looking to enter right here, our stop loss would be the low for 36 pips, but our TP is, obviously going to be the next high for about 500 pips. Now, someone might say this is completely unrealistic. There's no way you can catch these trades. I will literally show you the GJ trade that we did call out this weekend. Let me actually open up OneNote. Let me show you guys the before and after. I called this out in the chat as well. So this was the GJ sell I did call out. You can see we were looking to sell at 155,480. 155,480 was the sell we're looking to catch. Now from here, let me open up OneNote again. You can see right here, price came perfectly into 155,480 to the pip, and then from here ended up selling all the way back down for how much? 421 pips is our TP for a 28 pip stop loss. Now obviously we didn't catch this entire pip move because I did scalp this. I scalped it up down to here, but you could have easily caught this. So that's what I'm saying. When you are looking to catch these major moves, don't worry, just focus on catching the right entry, because that's the major thing that matters. Catching the right entry, it's all about the timing. So going back to Euro JPY, same thing. Let me delete this, my bad. Same exact thing. We have an institutional candle right over here, and then we also have an institutional candle right over here. We're looking to get in on a discounted price, which means this is the best possible time you could be getting in, because everyone's looking to sell this. Remember, retailers, they're out. They're looking to sell. They're looking to sell. And remember this, price could be right over here to our POI. And look, remember this. Let me show you something insane. This is gonna blow your mind. When price comes into your POI, right? Even institutional traders, you're gonna see this move down. This is theoretical. You're gonna see this move down. Institutional traders are gonna forget that this area is an order block, and they're gonna keep looking to sell. So what they're gonna do is say, okay, I'll sell over here, I'll sell over here. And when price ends up reacting off our institutional candles, look at what's gonna happen. Price completely breaks past your levels that you're looking to sell at. So that's why it's important to stick to the higher time frames and stick to trying to perfect your entries, perfect the timing of where you're entering. Remember, we're looking to enter at a really good price where no one's looking to enter at. No, retail traders predicting that price is going to come here and then buy, price is going to come here and buy. They're thinking about buying at this previous support that's going to turn into resistance, or they're looking just, catch that breakout entry. So that's basically what I am seeing for EJ. We're waiting for the price to come into here, and then from there we're going to be looking for that, major move up. UK 100, sure, I got you. UK 100. I don't really trade UK 100, but let's look at this. Okay, so UK 100 daily time frame. Now, obviously, you never want to sell. Don't sell these indices. You never want to sell this. Now, we can see that there is this pretty annoying trendline liquidity over here that is going to get grabbed now. The market created this really ugly liquidity over here. Touch, dynamic support, touch, dynamic support, touch, dynamic support, touch. The market breaks past it. It's clearing out the liquidity. Now, let's look at that major move up that broke structure. This is our previous high that got broken up. This high right here got broken right over here. So I'm going to create this as my COS. Now I'm going to focus on the start of this major move right here. I'm going to look for the institutional candle that was responsible for that break structure. So let's go down to the 3 hour. Let's go down to the 1 hour, 2 hour. And boom. Look at this. Clean last down candle. Now this looks like a wick, but if you go down to the 1 hour, it's really clean. There we go. Clean last down candle before the move up that broke structure. And now this is also where people are getting stopped out, because remember, there was liquidity resting right here. A touch of support, another touch of support, liquidity grabbed. This institutional candle was formed in the way of sweeping liquidity, which means that this institutional candle is much more stronger. So simply we'd be waiting for price to come back into this IC right over here. Now we did refine this, so entry would just be the open or over here, stop loss at the low, and then from there we'd simply wait for price to come down here, and then we take the buy. That's basically what I'm seeing. Now you said mark up the expansion versus the retracement and all that. Well, let's go down to the weekly and let's just keep this simple. Now on the weekly, this is the major expansion, this is the retracement, this is the second major expansion. Let me make this red. Expansion, retracement, re-expansion. Now we can go down to the daily and make this a little nicer. As you can see on the daily, it makes a lot more sense now, right? The market expands right here, it retraces, and then we have that re-expansion. Now someone messaged me on Discord saying, but on the 4 hour it's it's a lot different. Technically this is your expansion and this is your retracement. That's why I say stick to the higher time frames rather than the 4 hour and the 1 hour. The daily and the weekly will help you get a better understanding. But if you do want to use the 4 hour instead and avoid the daily, you could suppose you could do it like this. You have one expansion right here, and then you have that retracement back over here. Now from here you have another re-expansion right over here. Now it's not the cleanest, remember this isn't the cleanest, it looks really ugly, but that's just how it is. The market finished its retracement right here and then started another major expansion move back up right here that broke structure towards the left. It broke structure towards the left. That's how simple it is. So we already marked up why we're looking to buy at the low over here because of swap liquidity, and then from there you could look for your buyable opportunities. But yeah, that's basically what I would see for UK 100. Good. Hopefully that helped you out. If you guys have any more questions, let me know. Got you, man. No worries, anytime. Got you, brother. If you guys have any more questions, unmute your mic, say, text, whatever, just let me know. And yeah, I'm about to call this session a day soon. But did you guys learn on how I backtest? Like, I kept it real, by the way. I'm not gonna be like these other mentors showing you these crazy backtest wins all the time. That's not how trading is. My job here as like a mentor, as a trader, as a teacher, whatever, is to show you the reality of trading. And the reality of trading is you're gonna lose more than you're gonna win, but it's just about risk management and following your plan. Like as you guys saw, I lost 3 trades in a row. Now when you're backtesting, when you lose 3 trades, you might think, damn, maybe my strategy is wrong. It's not the strategy. Remember, the market is super random. Like, it sells off randomly. Like, no one can assume this is gonna happen. It's so it's so stupid it happens randomly. So my point is that don't worry about losses. It's a part of the game, and eventually you're gonna have to accept them. Worry about following your trading plan. That's the major thing, following the plan. If you're not following the trading plan, then at the end of the day you're just gambling, right? And we don't want to gamble. That's dumb. We want to make sure that we're following a plan that makes sense. The plan that I'm following, it's the trading plan I posted on the course. You guys should check it out. But everything I'm doing, it's in line with what I said on the trading plan. I said trade with the trend. Number 1, I'm trading with the trend. Trade look for the expansion retracement. I look for that sessions, liquidity. All these confirmations we're waiting and looking for. So I actually have to bounce. So before I do end this, any questions, last second, any questions, let me know. Like anything you want, let me know. Stop sharing my screen real quick. Alright, you guys seem to be good. You guys don't have any questions? Alright, perfect. I had a really good session with you guys. Can't wait for more sessions in the future. Take care, everyone. This week, I'm going to be sending all my trades out, by the end of today. But yeah, take care, everyone, and have a good one. Peace out. Have a nice one, yeah.